So speaking of commodities, right, we get oil Wednesday. So what time is it? It is 10:20 exactly. So we got 10 minutes until we get the EIA inventory report on oil. So jumping over to the NADEX platform, I have the oil contract up here, currently trading 67.69. Quite a number on oil, man. We climbed above $68 as of about the market open this morning. So right away, I jumped into the 11 a.m. spreads, okay? And so these expire at 11 a.m. And what we'll take a look at is potentially setting up, like we do, the bullish and bearish trades so that we can capitalize on potentially volatility in either direction as we come into this inventory report at 10:30. So quick glimpse, here's your 11 a.m.s. So right off the bat, 67.75 is going to be a price point that we can use for our bullish and our bearish spread, which is nice because we're trading literally right now at 67.75. So here would be our bullish spread, 67.75, up $1.50 to 69.25. Here could be our bearish spread, same thing except $1.50 downward, bearish from 67.75 to 66.25. You could buy the bullish spread, you could sell the bearish spread, and really all you're doing is you're looking for volatility, right, Tom? One way or the other.
Yes.
And both of them combined are going to cost you about $43. So that would represent 43 cents of movement you would need away from 67.75 in either direction before you start to break even. And again, these expire at 11 a.m., so you'd have about 30 minutes after that news breaks. So $43. Now let's jump around and just see what kind of other possibilities that you'd have on the platform. Now the noons line up with same exact price points, which is nice.
Okay.
So the only thing difference here is that you're going to be paying for an additional hour. Now what's nice is when we juxtapose the two contracts, here's your 11 a.m. and here's your noon. Now what's nice is you can see automatically the difference between the bid-offer spread. So you're going to pay an extra 4 pennies or $4 on the bullish side, and I'm guessing the bearish is almost going to be identical, and it is. So it's $4 extra on each side, so it's going to be about $8 extra total, and we'll just set it up the same way. You'd be buying the bullish spread, costing you about $25, selling the bearish spread, again, costing you about $25, $26. And the reason why they're identical is because you're right at the point where this would be the ceiling and the bearish spread, the floor and the bullish spread. So that one's cost you about $50 or $51. So what you can see is that, you know, here's the setup initially, right? You could pay $43 for the 11 a.m. You could pay $51 for the noon. Is that worth it to you? What do you think is going to happen between 11 a.m. and 12? Are you, do you want that type of time exposure? Are you willing to pay for that?
And 8 cents is not much in this market, man.
It might not be, right? Oil's been rocking and rolling. It has, depending on the move. It is nice that we're now 7 minutes away from when the EIA numbers drop. And let's just take a quick glimpse. I'm not sure. Let's see where the 230s line up. So the 230s, I'm just jumping around. So the 230s could line up. It's going to be a little bit of a different price, okay? But if you wanted action and exposure all the way until 230, you'd have 67.50 would be your price point.
Okay.
Now, the slight difference here is you're going to have intrinsic value on the bullish side, right? So you're going to be paying a little bit more for the bullish side because along with the premium, you're going to be paying for actual intrinsic value. So here would be your bullish spread, 67.50. Now, these are also $3 as opposed to $1.50. So you'd have 67.50, and you can see that automatically just this one side of the trade is going to be $44. And then on this negative side, it's about 25 cents out of the money, so you're going to be paying premium. So that's going to be about $64. Now that has a little bit of a bullish bias though, right? Because if you want to break even, yes, you do need to make up that 64 cents, but that 64 cents or $64, but 64 cents in movement needs to occur from 67.50. And you have a head start to the bullish side. So if you wanted to break even on the bearish trade, you'd need to get down there at about 63.85. Versus on the bullish side, you know, you only need the market to appreciate a good 40 cents or so forth to make that up. So it is kind of nice from our perspective when we're looking for a straight volatility trade. We have kind of no market bias up or down. We're just looking for volatility when the underlying index, this being crude oil, happens to line up right where the floor and the ceiling line up on these two spreads. Because what makes that so nice is you're paying no intrinsic value. And that's what makes the trade more affordable if you're just looking for volatility. So we got about 5 minutes until the news comes. Oil has been quite a market to the upside. We'll see where those numbers come in. And we'll see how the market reacts. But not bad trade when you look at the action we've been getting. And I I would like the noon maybe, and we always talk about, you know, if you're really looking for action, if you follow this market, there's a lot of action that occurs between 11 a.m. and noon after these numbers come out, and it's not always the first move that carries throughout the day once those inventory numbers are released.
There's no doubt. And, you know, it's intriguing. I mean, you know, we had the break topside in the oil market. The break I'm talking about, the consolidation once it got over 66. And, you know, now we're, you know, you're talking about 67.75. We're, you know, that's $1.75 over that number. So, you know, I'd basically been looking at that, you know, on a longer term basis, oil wants to go higher. So we'll see where this volatility goes as we come in. And, you know, when we look at the dollar once again can't handle price. You know, the dollar tried to get higher today, failed. Now it's down 23 ticks. You stop putting those together, it's like, you know what? Is oil going higher because we're using so much of it and there's less supply? Or is it a combination of that plus the dollar is basically getting smoked?
And you're letting your market biases slip in there. Dollar can't handle higher price. That's your bias. That's everyone's bias. You know, whatever we see, we'll see where the market shakes out in terms of what happens at 10:30 a.m. But that's the best part of this. You get to decide, right? You get to decide.
Right.
And like we always talk about, we highlight the two trades you can take. But if you're just straight bullish or bearish, you could just take one side of this trade. And what is nice, you know, in terms of the noons, we're looking at both sides of this trade in terms of combining them so you have exposure to the upside or downside. But either of these trades you could purchase for about 25 cents or $25, and then, you know, from 67.75, you just needed to go in your direction 25 cents and you're at break even.
No, I love the volatility trades. That's the bottom line. You know, I'm just basically giving it a longer aspect.
Definitely.
Stay right there, folks. Tommy and I are coming right back. We have the Dow right now down 29. NADEX up 5. S&Ps are up 2. Coming right back with oil numbers.
Welcome back, everybody. Tommy O'Brien with Tom O'Brien. So it is 10:30. We're getting those numbers. I'm seeing them come across the screen right now. So crude oil inventories falling 1.07 million barrels, the EIA says. Gas inventories falling almost 3 million barrels. And to check back to the NADEX platform, check in on the market. So we got a spike higher initially, and it seems like that's carrying. So again, we were trading at 67.75 prior to that number coming in. Currently trading about, I can't even keep up, 68.10, call it. And so to kind of recount, if we had traded the noons, those are going to cost us about $50, $51. So you would need 51 cents away from 67.75. So just call it 68.25 to the upside would be the area that you began to break even. And we're about 8-9 pennies from that region right now with the market climbing up. And before I finish, there we are. Okay, so here's our bullish contract. This is going to be the one with all the value since the market's rising. And you can see that as we're here, this market now is going to put us in a profitable position if you were to sell. There's your max profit, as in you'd close out that one contract, recoup your investment, or you just let it go. I mean, we're a minute and a half into the news, right, Tom? And we, you know, these contracts would have 90 minutes after 10:30. But like we always talk about, depends where your market bias is, right? If you see very limited potential to the upside, maybe that's where you decide to at least recoup your investment and keep your negative spread open for hoping a pullback throughout the next 90 minutes, or maybe you decide to let it run. There's a number of ways you can manage that over the 90 minutes until expiration.
And you know what's interesting, Tom, is that this here today was very close to the API last night. So it's interesting, you know, that those numbers, you know, a lot of times they're not even close, but yet the market basically still wants higher price, you know?
Yes.
Yeah, so.
Oil is not stopping, man. Not stopping.
No, it's not, man.
And as we speak, it's creeping higher, 68.28. So we'll check back in throughout the half hour. But hey, anytime you get enough action within the first 2 minutes to break even on the trade, that's a good indication in terms of that trade just right off the bat. But like we see, that doesn't mean it's going to hold there. We've seen that pull back within the next 2 minutes and be right back to where it was. So we'll check back in, see how the market reacts throughout the hour.
Yeah. So we'll go over and take a look at the dollar index right now. So, you know what?
I'm sorry. Can you stay on that chart you were at? So I just saw the median estimate, which was nice there. Before we'll finish up that segment real quick. So the median estimate was an increase of 650,000 barrels. There we go. And so we had a decline of 1 million barrels, and that's kind of the big headline number. So that would be, less supply, right? Supply equals demand is where the price equals. So less supply than they were thinking. The estimate was a rise, and we have less crude oil. So that's I just want to highlight that. That puts
and look at that gasoline, Tommy. They're expecting a 450,000 plus.
Yes.
And we got a 2.9
million barrel. Yep. Draw.
Right?
Yes.
Draw.
Yep.
And guess what? Folks, it's April 18th. Okay, May 30th, driving season is right upon us here.
And look at that distillate, same thing. The estimate was about even, minus of almost 400,000 barrels, and it came in at 3.1 to the downside.
And you know what? They're going to be using more gas and heating oil up in the Northeast because they're between New York and Boston. My understanding is that they're going to be getting more snow in the next
because
couple
the
days.
winter just refuses to end up there is what I hear. I know.
Seriously.
Yeah. So, just right back to the contract one more time before we jump. Spiked up to now 68.42 was the high, sitting there at about
that's a good trade, man.
68.27. So we'll see where it shakes out. Okay. Welcome back, folks. We got the Dow negative 13 points. S&P is positive by 7. NASDAQ positive by 11. Excuse me. So, Tom, let's check back in on oil one time. It is 10:55 currently. So we've had almost a half hour since the news, and pretty interesting. Like we talk about occasionally, the first move is not always the move that carries. Quite a pullback here, 67.89 currently. We're only about 13 pennies away from where we were when the news, prior to the news breaking. We're trading at 67.75, if you recall. Currently trading 67.89. So that's why when we talk about potentially, depending on your market bias, though, you could always trade out of that position. If you get a nice pop immediately and allow for, and this is what we talked about, you could have closed out your bullish spread for basically a break even on both sides if you wanted to, and then this bearish spread would have been the one that remained active until 12 o'clock. And, as we look at this market, we're now down 67.78. We're pretty close to approaching value in this bearish spread, and you still have an hour and 5 minutes that would remain active. Pretty intriguing,
amazing, right?
And as we speak, we're going lower, 67.69. Pretty intriguing for sure.
It is. There's no doubt.
Always an exciting day in oil recently when we get those numbers, man.